Hello and welcome to today's Dalal Street Week Ahead video. Now in today's video we'll take a look at one index and two stocks. I will start with the Midcap Nifty. I'll share my option buying and my option selling trading plan for it. After which we'll look at Zomato. I'll share my equity trading plan and my F&O trading plan for it since it's now in the future space. After which we'll take a look at Swiggy and see what equity traders can do with it post IPO. Now coming to the Midcap Nifty. Now the Midcap Nifty, according to me, anyone who wants to trade this expiry, I believe should focus more on option selling rather than option buying. Simply due to one factor, the volumes have lowered across the market due to the new laws. Then this past week and this coming week also, they'll be further lowered due to the holiday period. So now the mid-cap, I'll say most of the volume is ending up being in the headline indices like Nifty, BANKNIFTY and Sensex, and things like the Midcap Nifty and Fin Nifty have fallen way back. So option buying, for example, will be very tough if you're trading a bigger size, because you're trading in a box range which the index has formed, plus you're trading with lower volumes. So that makes it a bit of a tactile thing. So I think if you're an option buyer, I will share the trading plan. But you should still focus more on the headline indices rather than the Midcap Nifty. However, if you still say you want to option buy the Midcap Nifty since it has its expiry, I think as long as it's between 12,900 and 12,680, just you'll have to expect dual wave moves and don't try to think you're going to get a clear trending move on either side. In this zone, it will be only for scalping, a few points on the long side and a few points on the short side, and that is all you're going to really be able to achieve as an option buyer for this expiry. On the other hand, as an option seller is where I think things will be better. And I personally, my trading plan for option selling is, I will be selling calls and puts at the same time post open. So how I usually explain that if I'm going to deploy 100 rupees, I'm going to deploy 25 in 4 bits across the day, both on the call sell side and the put sell side. Now, I always share my cautious option selling plan and my aggressive trading plan. Now, if I see the Midcap Nifty opened roughly at the same point that it closed, then I'll most likely go with my aggressive option selling trading plan, which will involve selling calls above 12,900 and puts below 12,680. That means basically as long as it stays within this range, those option sales are going to make a profit. Naturally, as soon as I enter, I will start placing profit stops. This is, as I always say, anyone who's doing expiry trading knows it's very easy to enter initial small profits on expiry day. So it's better to put a profit stop. So if by chance one side cracks, then you're out of that side's position with a profit, and the other side option sales can go towards zero and earn you the maximum profit. So my aggressive option selling trading plan is sell calls above 12,900 and puts below 12,680. So sell the range. If you're cautious, then sell calls above 12,980 and puts below 12,560. So you're far away from the action. So even if there's a sudden spike or drop within this range, you won't shake that much out of fear, as these options will be still decaying in a constant pace, I would say. So my option trading plan for this expiry for this is pretty simple: sell calls and puts at the same time, and then just adjust the profit stops and keep adding up the position as the day goes along. So now let's look at Zomato next. Now Zomato has been one of the best performers of the Indian stock market this year in 2024, and it's been also one of my best performers. In fact, if someone goes back to opens my Twitter handle and searches in my Twitter profile for Zomato, they will see I had recommended the stock when it was at 51 rupees, and in fact it was a recommendation where I had even shown my position, as I had shown the buy trade I had done via Zerodha into Zomato, as I had bought it and I said I'm going to keep holding it, and I gave multiple updates across the time frame, across the year, via either the investing articles or via my Twitter handle. That time I was not active on YouTube, so I never gave it via YouTube. So now Zomato has had a very good year, and in fact now I'm seeing some other funds are starting to recommend it for 2025. But now the mistake which I see they're doing, they've missed the real meaty part, because I would say any upswing now will be slower and less juicy than what it has given us in the past 1 year. So what is my trading plan for it. Now, out of my position, I have cashed out of 20 to 30% of that position, roughly 30% of the position. I've taken the profits. This is as once it hits 300 rupees, for me that was a quant resistance level, and I cashed out of the position partially. So now I have an equity trading mindset for this and an option trading mindset, because I have different trades in both spaces. Now on the equity side, according to me, it's going to be entering a box range between 285 and 260. Now, as long as it is between this box range of 285 and 260, I'll continue holding my position as is. Because the minute it breaks above this, it can start a new upswing. There won't be that profitable like the past one, but it will be profitable. It will give some more profits. However, if it breaks the support at 260, then I'll cash out from half the position, and I will then cash out fully if it breaks below 246 rupees. So that's how I am taking a look at it. Why am I doing so? Because I believe if it breaks 260, then it will be entering a new box range between 268 and 246, and that is why I'll cash out half, as that will end up turning it from being bullish to being neutral in this range. And if it breaks 246, then it goes from being neutral to bearish in the medium term. So it will be better to cash out if it breaks this and then enter it again at one of the other price points. But if I do that, I'll provide an update on this channel at that moment. So that's my equity trading plan. Now what's my option trading plan? Now my option trading plan, I already hold call sells in it. Since options, I'm looking at the short term. That is why on the option side I'm bearish, and on the equity side I'm neutral, I would say right now. Now I'm holding already 300 and above call sells, which are in a good profit, and I'll be cashing out that in the coming week. I've eaten about 80% of the premium which is available, so I don't think you need to stay for the remaining portion. But I will be entering a new trade in Zomato FNO space, or basically I will sell calls above 285 and puts below 260. So I'm going to basically sell this range, which I say I expect it to trade in, and as long as it trades within this range in the January series, that position will make money. I will naturally keep initially a loss stop, and then as it goes into profit, I'll shift it to a profit stop. So if one side by chance breaks out, I'm cashed out of that side, and I can enter the position again if I need to. So that's how I'm going to be trading Zomato. Pretty simple equity. I'm holding about 70% of the position I initially had. If you break below 260, I'm out of 50% of that 70% left. And if it breaks 246, I'm out of it completely. If it stays within this range, I will just sit down with it. Option sells, I plan to enter a new position as I'm closing my old position in the coming trading sessions. So any other questions on Zomato, you can drop them in the comment section below, and I'll answer them to the best of my ability. Now we'll take a look at Swiggy. Now Swiggy has done well post IPO, and this is usually a pattern which, if you look at new age stocks, basically why I'm calling new age stocks that don't have really any fundamentals with them, have never really made big money, but right now riding on a high of basically funding and debt. Now whether we look at Nika, whether we look at Swiggy, whether we look at the previous Zomato, whether we look at PB Fintech and all, we see that usually post IPO they will do a bit well, after which they'll come crashing down. Now according to me, Swiggy has reached that sort of a point. This is as it is right now, trading within two box ranges. Box range 1 is the big one between 590 and 530, while box range 2 is a small one between 540 and 575. Now as long as it is between this big box range, it's going to continue going up and trapping new money. But the likelihood of it breaking 590 is pretty low, and even if it does, then I think max it can go is to 630. But on the other hand, if Swiggy breaks the support between 530 to 540, then it will commence its downfall, which will be a medium term move rather than a short term move. So how I'm looking at it, naturally Swiggy is not in the FNO space, so I cannot capitalize on it via shorting the stock in positional. But as an equity trader, I would say if it breaks this zone, then do not enter, as it will most likely fall to 495, and if that breaks, it will fall to 460. On the other hand, if it holds this support zone and you want to do an equity buy, then it's a short-term equity buy to the resistance at 575, then 590. By chance it breaks that, then 630, and you cash out. This is any up move right now, according to me, is a dead cat bounce, and it will only trap new money and bring you down in the medium term. So this is, I believe, is not a medium term buy. It's only a dead cat bounce type of stock. But if it breaks 530, then it won't even get the dead cat bounce. It will enter its death spiral the whole way. And we have seen this trend play out again and again. For example, I shared earlier that you can check on my Twitter. I had shared Zomato as a buy at 51 rupees. Why was I able to do it? Zomato had the same thing. It opened well, IPO'd well, I mean, went a bit, then just came crashing down for months and months until the 51 mark, and then there it started its bullish trajectory. I expect the same with Swiggy. Once it breaks 530, it will be doing the same pattern, going down for months and months, and then reaching a base and then having a new rally once it has broken all the guys who came in with all the IPO hopes that they're going to become overnight millionaires. So that is my view on Swiggy. It's a bit very bearish, but it is what it is. The chart is showing as of now. So that's it for today's video. Any questions, you can drop them in the comment section below. Any stocks you want covered in the future, you can drop them in the comment section below. If there's something, I will cover it. And thank you for watching, and hit that button, like button, and subscribe to the channel.